Hello viewers, welcome to my channel. I'm Hasham. Last two videos I've explained you about perquisite, meaning of perquisite, what are the different types of perquisites and what are the provisions regarding rent-free accommodation and concession in the matter of rent, insurance premium of the employee paid by the employer, monetary obligations of the employee met by the employer, interest-free loan or concession in interest on loan given by the employer to the employee. All these provisions I've explained in the last two videos. Now in this videos further some more perquisites I'm going to explain, because all these items are very important in problems also. So if you have not watched these theory videos, definitely you will encounter a lot of problem while solving the problems. So my suggestion, you watch all the theory videos, be perfect. And one more thing, previous assessment year and this assessment year, there is no change in the provisions of these perquisites. So you can rely on my previous videos, and also in this video, if you find on the board, if it is given assessment year 22-23, just ignore, because the provisions are same, whatever we have. Now in this video, I am going to explain you about medical facilities. Different ways medical facilities will be provided by the employer to the employee or their family members. The employees are getting the benefit. The medical facilities are being received from the employer. It's a perquisite. So in which circumstances it is taxable and which circumstance it is exempted. All these things I have explained in detail in this video. Now, treatment in hospital maintained by employer to employee or any other family member is a tax-free perquisite. Sometimes employer will maintain a hospital mainly for treatment of employees or their family members. So if any employee or family member getting the benefit from the hospital which is run by the employer is a tax-free perquisite. Similarly, the employer pays for the treatment of the employee or his family member in hospitals maintained by government or approved by the government is a tax-free perquisite. Sometimes what will happen, the employee or their family member are getting the treatment in a government hospital or government approved hospital. Then but the payment is made by the employer, then again it is a tax-free perquisite. Reimbursement of medical expenses incurred in a recognized hospital in India. That is also tax-free. For example, an employee got the treatment in a recognized hospital. Which are recognized and which are unrecognized, income tax provisions have given the list. So, if it is recognized hospital, any reimbursement of medical expenses will be tax-free. Whereas, if the reimbursement is made in an unrecognized hospital, then it is fully taxable. Here briefly I am explaining. In detail I'll explain in the coming part. Gifts given by the employer. If any gift is given in kind by the employer to the employee or their family member, up to 5,000 rupees gift, it is exempted. The excess over 5,000 is taxable. Similarly, expenses paid by the employer on credit card. Sometimes credit card is being maintained by the employee, but expenses incurred on the credit card is paid by the employer. Again, it's a perquisite, taxable. Similarly, club membership fee. The employee has become a member of a club, but membership fee is paid by the employer. Similarly, use of mobile assets. Some mobile assets are there which belongs to the employer, but it is used by the employee free of cost. Then it's a taxable. Similarly, sale or transfer of movable assets, of any movable assets. Some movable assets like machinery, like furniture, etc. These are movable assets, but it is transferred or sold by the employer to the employee. So if there is any benefit on that transfer, again it is a taxable perquisite. Now I'm continuing our discussion on perquisites. Last two videos I have explained you the meaning of the term perquisites and what are the different types of perquisites. Perquisites taxable to all employees, perquisites taxable to specified employees, and tax-free perquisites. The first category, perquisites taxable to all employees. So totally 13 examples I have given where the perquisite is taxable to all employees. Out of 13, 7 examples I have already explained in the last video. Now in this video I am going to continue from 8th to 13th. What are the provisions? How to calculate the value of the perquisite? Remember, this theory is very important. Without understanding all the provisions of Income Tax Act, you cannot solve the main problem. And normally nowadays in universities they will ask nearly 50% of question paper will be on theory. Without understanding the theory, we cannot solve the problems. Problems are based on theory. So watch the video till the end. If you have not watched the earlier videos, I suggest you go to the playlist of my channel, select the subject income tax for the assessment year 22-23. Watch the videos regarding perquisites, be clear. Then definitely you can be able to attempt the theory question as well as confidently you can solve the problem. So before proceeding, I suggest you take the screenshot of the points which I have written on the board, then I'll explain. Now, eighth perquisite which is taxable to all employees, that is medical facilities. Most of the problems we come across this point regarding medical facilities. Now first one, reimbursement of medical and health insurance premium paid by the employer for employee or family member in any scheme approved by IRDA, Insurance Regulatory Development Authority. This is the IRDA is the authority for controlling, managing the insurance in India. So any scheme approved by IRDA which qualifies for deduction under section 80D is a tax-free perquisite. Example, if an assessee has taken a medical or health insurance policy on his own life or on the life of the family members, and this scheme is approved by IRDA, Insurance Regulatory Development Authority of India, and this scheme will qualify for deduction under section 80D. In the coming videos, I'll explain you what are the deductions under section 80. So one of the section is under section 80D, which says if a person has taken a health insurance policy and paid health insurance premium, then deduction will be allowed under section 80D. So here what it says, if the employer reimburses the amount paid for health insurance premium taken on the life of the employee or on family members, which is approved by IRDA and which qualifies for deduction under section 80D, is a tax-free perquisite. Second one, treatment in hospital maintained by the employer to the employees or family member. Many cases, a hospital will be maintained by the employer to provide health facilities to the employee or their family members. Suppose Mr. X is working in a company. The company has maintained a hospital for the benefit of employees and their family members. So any employee or family member getting health facility from the hospital which is maintained by the employer is a tax-free perquisite. Next one, the employer pays for the treatment of employee or family member in hospitals maintained by the government or hospitals approved by government, is a tax-free perquisite. If the employee or their family member is getting medical treatment in a government hospital or in a hospital which is maintained by the government, is again a tax-free perquisite. Any sum paid by the employer in respect of expenditure incurred by the employee or family member on medical treatment in respect of prescribed diseases or ailments in any hospital approved by Chief Commissioner of Income Tax is a tax-free perquisite. So Income Tax Act, the Chief Commissioner of Income Tax has approved that these are the diseases. So a set of diseases has been prescribed by Chief Commissioner of Income Tax. So if an employee or their family suffers from those diseases and getting the treatment in a hospital, then Income Tax Act says it's a tax-free perquisite. Next one, reimbursement of medical expense incurred by the employee in a recognized hospital in India. Very important point, this one. Income Tax Act has prescribed that these are the recognized hospitals in India in every city. Now, if an employee is getting the treatment in a recognized hospital and the amount is paid by the employer, Income Tax Act says it's a tax-free perquisite because the treatment is done in a recognized hospital and the amount is paid by the employer, tax-free. And reimbursement of medical expense incurred by an employee in an unrecognized hospital is fully taxable perquisite. If an employee is getting the medical treatment in an unrecognized hospital and the amount is paid by the employer, then it is a taxable perquisite in the hands of all employees. If the employer pays medical expense directly to the hospital for the treatment of employee or his family member in a private nursing home in respect of specified diseases or ailments prescribed by income tax rules, is fully exempted. Now remember, an employee is getting treatment in a private hospital, but the bill of the hospital is directly paid by the employer to the hospital, and the employee is suffering from the prescribed diseases given by the Income Tax Act. It is fully exempted. Example, Mr. X is suffering from a specified disease which is prescribed by the Income Tax Act. He is getting the treatment in an unrecognized hospital, but the bill is directly paid by the employer to the hospital. In that case, it's a tax-free perquisite, exempted. Next one is for treatment of medical expense incurred by an employee in a foreign country. Now remember, sometimes the employee or family member are getting the medical treatment not in the domestic country, home country. They are getting the treatment in a foreign country and expenditure is paid by the employer. Then losses. Income Tax Act says for treatment of employee or family member, it's a tax-free perquisite. Example, Mr. X is working in India. He is suffering from a particular disease. He wants to get the treatment in US. So he is going to US, not alone, but one attendant is also there. So the medical treatment expenditure incurred abroad in US, that expenditure comes to 5 lakh rupees. And that 5 lakh rupees is paid by employer. It's a tax-free perquisite. So medical expense incurred in a foreign country, medical expense incurred on the employee or family member in a foreign country that is paid by the employer is a tax-free perquisite. For stay abroad of the patient and one attendant, it is a tax-free perquisite. Not only medical expenses, but staying expenses, accommodation expenses of the patient and one attendant paid by the employer is a tax-free perquisite. Third, for expense incurred on the travel of the patient and one attendant, if the GTI of the SSC is less than 2 lakh, tax-free perquisite. Actually, 3 expenditure are there: medical expenditure, staying expenditure, and traveling expenditure. For medical expenditure, tax-free perquisite. For travel, for accommodation, for staying expenditure of the patient and one attendant, tax-free perquisite. For travel expenditure, Income Tax Act says we see the GTI, gross total income of the SSC. If the gross total income of the SSC is less than 2 lakh rupees, then travel expenses of the patient and one attendant is also tax-free. If the gross total income of the SSC is more than 2 lakh rupees, then travel expenditure of the patient and one attendant is taxable. This is tax. So when the travel expenditure is taxable, if the gross total income of the SSC is more than 2 lakh. All the expenditure are paid by the employer. That means treatment expenditure, staying expenditure, and travel expenditure. All the expenditure paid by the employer. In that case, treatment tax-free, staying tax-free, travel expenditure taxable if the employee's GTI is more than 2 lakh. If the employee's GTI is less than 2 lakh, that will also be tax-free. That's all. Note, fixed medical allowance. Allowance is different from facilities. Allowance means a fixed amount, a fixed amount is given by the employer to the employee, whether the employee is suffering from the disease or not, immaterial. A fixed medical allowance is given by the employer to the employee every month. In that case, it is fully taxable to all employees because it is an allowance. That's it. So these are the provisions regarding medical facilities. Now, ninth one, gift given by employer. Sometimes a gift will be given by the employer to the employee either in cash or in kind. So Income Tax Act has given the provisions regarding taxability of gift. During the previous year, if any gift is received, gift in kind is received by the employee from his or his family member from the employer, it's tax-free perquisite up to the value of 5,000 and the excess amount is taxable. First point you have to remember. If the gift is given in kind by the employer to the employee or their family member, it is tax-free perquisite if the value of the gift is up to 5,000. If the value of the gift given is more than 5,000, the excess will become a taxable perquisite in the hands of the employee. First point. Second, the gift may be given on the normal course or on a ceremonial occasions. During the year, at any time the employer has given the gift or the employer has gift on a ceremonial occasion like birthday or annual day or wedding day anniversary like that, or a particular ceremonial occasion also, the gift may be given, the same provision will apply. The employer need not give gift to all employees. Even if it is given to few employees, it becomes taxable perquisite. There is no condition that gift should be given to all employees. Even if the gift is given to few employees, it will become taxable perquisite. Now the employer may present the gift either in cash or in kind. It is not necessary that the gift will be given only in kind. It may be given in cash. Suppose if the gift is given in cash, it is fully taxable. That rule of 5,000 exemption will not apply. Any gift given by the employer to the employee, that is taxable. So if the employer gives the gift in cash, then it is fully taxable. The basic exemption of 5,000 is not allowed. That 5,000 basic exemption is allowed only if the gift is given in kind. Now, if the gift is given in kind, up to 5,000 is tax-free, the excess amount is taxable. So these are the provisions regarding the gift given by the employer to the employee. Now, expenses paid by the employer on credit card. This is the 10th point. 9th point we have completed. 10th point. Expenses paid by the employer on credit card. Sometimes the credit card will be given by the employer to the employee or family members, or credit card is used by the employee or family members and reimbursed by the employer. Then it is a taxable perquisite. So if an employer provides a credit card to an employee or his family member and pays all expense or reimburse, such expense will be taxable to all employees. The aggregate of all the expenses, the aggregate of all the expenses is the value of the perquisite in case of credit cards. Next level, club membership fee. The employee has become a member of a club in personal capacity. In personal capacity, he has become a member of a club, and the membership fee or admission fee is paid by the employer. It's a taxable perquisite. If the employee has become a member in official capacity, that means the meeting of the company, the meeting of the employer will be conducted in the club. So that is the reason why he has become a member of the club. In that case, the club membership fee is not taxable because he has become a member in official capacity. If nothing is given, we assume it as personal capacity, it is taxable. Next, 12th, use of movable asset. Sometimes a movable asset is owned by the employer, but sometimes it will be used by the employee for their personal use. Then Income Tax Act says it's a taxable perquisite in all the cases. So here, if the employee or family member uses any movable asset belonging to the employer, it becomes a taxable perquisite to all employees. The term movable asset does not include computer, laptop, etc. Sometimes computer or laptop of the employer is being used by the employee. That will not come under this category. Apart from computer and laptop, if any other movable asset belonging to the employer used by the employee is a taxable perquisite. Value of the perquisite: if the movable asset are owned by the employer, 10% on original cost of the asset. If the movable asset is owned by the employer, then 10% of original cost is the value of the perquisite in the hands of employee. Suppose if the movable asset is hired by the employer and given it to the employee, in that case whatever hire charges paid by the employer, that will be the value of the perquisite. Now the last 13th case is sale or transfer of movable asset to the employee. Sometimes a movable asset which is owned by the employer and it is transferred or sold by the employer to the employee, and any benefit accrues to the employee, it's a taxable perquisite. Example, the cost of the asset is 1 lakh to the employer, and during the last so many years it was depreciated. Now presently the value of the asset is, let it be 40,000. 40,000 is the book value, present value of the asset, and this 40,000 value of asset is being sold to the employee for 10,000. Now how much benefit the employee is getting? 30,000. Because the value of the asset is 40,000, he got it at 10,000. So 30,000 is the value of the benefit, and that is the value of the perquisite in the hands of the employee. So when the employer owns a movable asset and is transferred to the employee or his family member, if any benefit accrues to the employee, then such benefit value is treated as perquisite value, which is taxable to all employees. So which is taxable to employer. For how to calculate the value of the benefit, simple example I have given: original cost. Take the original cost as 1 lakh rupees. Then less normal depreciation. During the last so many years it was depreciated. So 1 lakh rupees, out of 1 lakh rupees, 60,000 rupees was the depreciation already provided. So 1 lakh minus 60,000, 40,000 rupees is the book value. Book value 40,000, and he sold it for 10,000. The transfer price is 10,000. So 40,000 book value, 10,000 transfer price. So 40 minus 10, 30,000 rupees is the value of the perquisite. In this way we calculate the value of the perquisite. The following points are to be considered. Transfer of an asset may be price or free of cost. So sometimes the asset is sold, or sometimes the asset is freely given by the company, by the employer to the employee. Both cases there is a value of the perquisite. Now transfer. Depreciation is calculated as under. How to calculate a depreciation? Income Tax Act has given the rules. For example, in computers, if computers are sold by the employer to the employee, then depreciation will be calculated on RBM. RBM stands for reducing balance method. The rate of depreciation is 40%. So in the coming problem, we come across this situation where employer has sold a computer to the employee. You must remember that we have to depreciate the computer by following RBM, reducing balance method, at the rate of 40%. Secondly, electronic items. For electronic items also the same, reducing balance method we have to apply, and the rate of depreciation is 40%. Then motor cars. If motor car is sold by the employer to the employee, again reducing balance method of depreciation we have to apply, and the rate of depreciation is 20%. And last, any other asset. For any other asset, the rate of method of depreciation is straight line method, and the depreciation rate is 10%. This will not be given in the problem. You have to remember these provisions, these rate of depreciation and method of depreciation. Now, electronic item means computers. Electronic item means computers, digital diaries, printers, etc., but does not include household appliances like washing machines, mixers. This will not come under electronic items. Electronic items will include computers or printers or digital diaries, etc. Now depreciation is calculated for each completed year of service. Any fraction of the year should be ignored. So while calculating depreciation, take the depreciation for the whole year, completed year. If any fraction of the year you get, ignore the fraction and calculate only for completed year. That's all. So in this video, I have completed the provisions regarding perquisites which are taxable in the hands of all employees. Second category is those perquisites which are taxable only in specified employees. So in the next video, I am going to explain you who are called the specified employees and what are the perquisites which are taxable only to specified employees, not to all employees. That will take up in the next video. So give a like to the video, share my channel, give your comments, subscribe if you have not yet subscribed, and buy the super thanks which is given below my video. Inshallah, we'll continue our discussion on perquisites in the next video.